Good evening, guys. I can see three of y'all has already joined. Let's wait for a couple of more minutes and then we'll start. Okay. Good evening to all of you once again. Am I audible? And can you guys view the screen? Awesome. So today we will discuss a sort of a paper. This is a bit old past paper, but the questions are relevant for your exam. So these old past papers has, a little bit more tougher than the existing papers. So we'll just try to focus on these old papers first of all. Then gradually we move on to the other aspects as well. I have shared this in your WhatsApp group as well. So this is one of the mock papers in your BPP revision kits as well. Shall we give a try for this one and see? Okay. Can you guys try first three questions first? This is shared in your WhatsApp group as well. Can you guys give an attempt for the first three? One by one, we'll discuss gradually. Attempt three, then we'll discuss. Attempt three, we'll discuss. Shall we have a method like that? Great. So each carries 2 marks. So 6 marks means how many minutes you guys have then? 10.8 minutes. So that means you have to try these three questions within 10 minutes. So give a try, then we will start discussing. Don't rely on these, what you call the multiple choices given. Sometimes that answers might not be there. So don't rely on the multiple choice answers given. Just do your own calculation and keep the answer for calculation related questions. Are we good? Don't rely on the multiple answers given for calculation related questions. Are we good? Great. So your time starts now. You guys have 10 minutes. Give a try for the first three questions only. Then we will start discussing the rest. Once you are done, just share the answers in the chat so I also can have a view on what you guys have come up with. First three, share the answers in the chat as soon as you're done. After 10 minutes, we'll start discussing. All right, guys, time is up. Can I have the answers that you guys have come up with? Doesn't matter if you can or if you couldn't finish it, but at least for the questions that you have finished, share the answers with me, please. Okay, great. I got the answers from Muaz. The others, can you guys also please share the answers? It doesn't matter if you couldn't finish all three. At least for the ones you have done, share the answers with me. Raisha, Esma, Nafis, Naja, can I have your answers, please? Okay, great. I got the response from Eshma as well. Okay, one from Naja. Okay, two from Naja. Raisha done all three. Okay, Nafis has just joined. All right, good. So I got few answers. Let's start. So when it comes to section A also, always start from the requirement. Because sometimes if you just go through the question and come to the scenario, certain things might be in your head. So your answer might not be answering to the requirement. You might get deceived. Therefore, always start from the requirement. So in the first one, the requirement is, sorry, in respect of Samir's cash gift of £50,000 to the trust, what is the lifetime transfer of value for inheritance tax purposes after taking into account of all available exemptions? So they are going to touch the inheritance tax, and we are talking about a gift to a trust. So is it going to be a CLT or a PET? It's a lifetime transfer. CLT or a PET? Great. So he is gifting it to a trust. That means it's a CLT. So PET means it's between two individuals. So if one party is not an individual, then it becomes a CLT. Good. Okay. Having that in mind, let's go through the numbers given. On 1st July 2020, he has made a cash gift of 2,500 to his sister. So CLT or a PET? Great. It's a PET. On 1st May 2021, he made a cash gift of 2,000 to a friend. CLT or PET? Great. Again, a PET. Then the last one is the gift that we are talking about, the gift that he has made to a trust. So first two are PETs. The third one, the one is under our consideration, is a CLT. So do we need to think about the previous two? Yes, but also no. Okay. The others, what are your thoughts? Consider AE. Okay. I got one answer as consider AE. Yes. Okay. So I agree. We have to consider only the AEs. Let's go to an Excel and see how do we treat a question like this, because this can be a section C question as well. So I take the gift first of all, 50,000. Current year AE. So current year would be 2021, 2022. Do I have the full AE remaining with me? I got one answer as yes, one answer as no. The others, what are your thoughts? Okay. Raisha also believes yes. I would say no. Because current year, before this gift to the charity, you have already done one more gift, right? Which is a PET, I agree. But even it is a PET, it will go from AE. Annual exemption will be taken out. We don't only take the nil rate band for the PETs, but AEs we consider. So our AE is 3,000. Out of that, 2,000 is already taken out by the gift that I have given to the friend, isn't it? Agree on that? Great. So if that is the case, from the current year, I have only £1,000 remaining from AE. What about from the previous year? So previous would be, now we are talking about 2020, 2021, 2022. So the previous year would be 2020, 2021. Yes, only 500 will be remaining because I have given a gift of 2,500 in the previous year as well. So 2,500 taken out from 3,000, only 500 will be remaining. So the maximum AE that I can claim would be limited to 1,500. So that's what I have done here. 50,000 minus 1,000 minus 500. So I'm ending with 48,500. So that would be answer number 1 or A. Okay, Raisha's answer is correct. Eshma's answer is correct. Muasa's answer is correct. Are we good with question number 1? Any doubts? Great. Then I'm moving on to the second one. Don't be too quick to decide that because this paper was not that easy. Raisha, are we okay with the Excel? It's not confidence, but what I say is in an exam, don't judge the paper from the first question. Because when I was a kid, I had a policy, even in a movie, if the first 15 minutes is boring, I just watch to the end. Usually it's a good one. If the first 15 minutes is too much exciting, usually the end of the movie is not that good. They ruin at the end. So I take the same thing for papers as well. If the first one is easy, I will be a little bit more extra careful because when I go to the latter part, the questions might be tricky. Therefore, don't get deviated or come to assumptions whether the paper is easy or not. Just from the first question, be careful. Latter part might be more tricky and troublemaking. Yes, if the beginning is easy, the latter part might be a heart attack. So let's not be overconfident, but confidence is good. All right, so I'm moving on to the question number 2. Great. So on 31st March 2022, Angus sold a house which he had bought on 31st March 2008. Angus occupied the house as his main residence until 31st March 2013 when he left for employment abroad. Angus returned to UK on 1st April 2015 and lived on the house until 31st March 2016 when he bought a flat in a neighboring town and made that his private residence. What is Angus's total number of qualifying months of occupation for private residence relief on this sale of house? So we are going towards the PRR now, private residence relief. So what were the things, what were the occupancies and deemed occupancies that we were considering under PRR? We had occupancy and we had few deemed occupancies under PRR. What were the deemed occupancies? If he work abroad, okay, any number of years or any number of months if he is working overseas, okay, good. What else? If we work somewhere else or elsewhere, then how many years? Work elsewhere, how many years? Not two for work elsewhere. For any reason, 3 years. Yes, I agree. Any reason, 3 years we grant. Work elsewhere, uh, 4 years. Yes, work elsewhere, it will be 4 years. Good. Then the final one would be last 9 months of your ownership. So these are the deemed occupancies. So let's see what are the things applicable for Angus. So for this one also, I'm just doing the working in an Excel. You can do the same thing on a paper as well in your exam. So according to the question, he has purchased it in 31st March 2008. Until 31st March 2013, he has been occupying the house. So that means how many years? 9, 10, 11, 12, 13. How many years? Great. 5 years. I have taken it in months. That means 60 months. Are we good how I got 60? Great. Then the next one. Then till 1st of April 2015, sorry, he has been working overseas. So that is also qualifying, right? Because overseas working overseas is allowed for any number of years. So that is 14, 15, 2 years. So that means 24 months, right? That is also we can consider as what you call occupied. Do you agree? Work overseas 2 years also we can take under the deemed occupancy. Great. Then from 1st of April 2015 to 31st March 2016, that means one more year he has occupied the house. So again, that is qualifying, right? Actual occupation. Then in 31st March 2016, he has brought another flat in a neighborhood town. And after that, he has been staying on that particular house. So is there anything else that we can claim? Yes, last 9 months we can claim. Good. Can we claim any reason 3 years? Is it possible for us to claim for any reason 3 years? I got one answer as yes, one answer as no, two as no, two as yes. Okay, so those who believe no, why do you say no? Najar and Nafis, why do you guys think we cannot claim the last 3 years? Sorry, any reason 3 years? Correct. I agree with Naja's answer. If you are claiming for the work elsewhere or any reason 3 years one, there should be a subsequent actual occupation to follow up that. Under that condition, only you can claim work elsewhere and for any reason 3 years. But that is not happening here, right? For the after the period that we are planning to claim for these last 3 years, he have never occupied the house. So the condition is not satisfied. That's why we cannot claim the last 3 years. Sorry, not last 3 years. For any reason, 3 years exemption we cannot claim here. Are we clear on why we cannot do that? Sure. Let me repeat it again. So if you are claiming the exemptions for any reason 3 years or work elsewhere 4 years, it should always backed up by a subsequent actual occupancy. So at any point, if you are claiming these two, at some point after the period that you are looking at for these two exemptions, you should have occupied the house, which hasn't happened in this case, right? So the period that we are looking at for any reason is the period from 1st of April 2016 to 31st March 2022. But within that period, he has never occupied the house again, right? After he left, he has left. He has never occupied the house again. In that kind of a scenario, we cannot claim work elsewhere or any reason 3 years. It should always be backed up. It doesn't necessarily need to be an immediately after that. But at some point, there should be a backing up actual occupancy for that if you are claiming for those two. Uh, no, Moas, it's not about the foreign employment. It's about now the period that we are planning to claim this any reason is from 1st of April 2016 to 31st March 2022, right? Is that one we agree? And then what I'm saying is, within this period, he has never occupied the house afterwards, right? Once he left for this flat in 2016 March, he has never come back after that. Exactly. We can claim only if these exemptions are these two exemptions, work elsewhere and what do you call any reason. We can only claim if it is backed up by a subsequent actual occupancy. After the period that we are claiming for these two exemptions, if he has actually occupied the house at least for 1 month after that, then you can claim. But in this case, it hasn't happened. He has never occupied the house after he has left for the flat. If that is the case, we cannot claim for any reason or work elsewhere exemption. Are we clear? Any queries on this question? Up to now, we haven't completed yet. Any queries up to now? Great. Then let's go back to the Excel. I'm not claiming this. Last 9 months, I can take. So altogether, my PRR would be 105 days. Everyone agrees on that? Great. So the answer would be the third one. Do you guys agree with that one also then? 105 months? Super. So if this was a section C kind of a question, make sure you give a 0 here. Just to show the examiner that you knew any reason is there, but this cannot be claimed. That's why you're not using that. If this was a section C question, keep the 0 here. But this is a section A1, so you don't need to give this working. You can straight away do it in your paper or calculator and finish it off. So can I move on to question number 3? Any questions on question number 2? Great. So I'm moving on to question number 3 then. We have Abena who has made some gross contributions to her personal pension scheme over the past 3 tax years. Okay, we have the data. Abena is entitled to an annual allowance of 40,000 in all tax years from 2018-19 to 2021-2022. What is the maximum gross contribution which Abena can make to her personal pension scheme for the tax year, sorry, 2021-2022 without giving rise to an annual allowance charge? So what is this annual allowance first of all? Annual allowance means a maximum limit which you can invest in a pension scheme. If you go beyond that, there will be an additional charge called annual allowance charge. But the good thing here is, if there is any unutilized annual allowances from the past 3 tax years, you can carry it forward, but only for the past 3 tax years. Anything goes beyond that, you cannot utilize. Are we clear on the concept? Great. Then let's try to put these numbers into the Excel and see where we are going to end up. So, sorry. The tax year we are talking about is, okay, 2018-19. Is there any excess that we have to consider? Any remaining annual allowance? Great. There is no remaining annual allowance from the tax year 2018-19. So I can simply ignore 18-19 because of that. So my calculation will be only based on 2019-20 and 2020-2021. So I have 13,000 and 12,000 respectively remaining from those 2 years. So altogether, I have an unutilized amount that I can use up to 25,000 plus the current year's 40,000. So altogether, my limit will become 65,000. So up to 65,000, I can invest in a pension fund in the current year without giving rise to an annual allowance charge. Are we good? Yes, number of years we have a limitation only for the past 3 tax years. You can carry forward only for 3 tax years. Beyond that, you cannot carry forward. Great. Okay. Then can you guys try question number 4, 5, 6 as well? Again, within 10 minutes. Can you guys give a try? Great. So 10 minutes, give a try for question number 4, 5, 6. Your time starts now. Share the answers once you are done. And after 10 minutes, we'll start discussing. Okay, guys, time is up. How's the situ? Can I have the answers that you guys have completed? All right, great. Can you guys share the answers, please? Okay, I'm getting some answers from Muaz and Nafis, Eshma, and I'm not sure who has joined us top. Can you guys also share your answers, please? All right, let's go through the question number 4. We have a Triangle Limited registered for value-added tax and uses the annual accounting scheme. For the year ended 31st December 2021, the net VAT payable by Triangle Limited was 73,500. For the year ended December 2020, the net VAT payable by Triangle Limited was 47,700. Indicate by clicking on the relevant boxes in the table below the number and amount of the monthly payments and account of VAT which Triangle must make in respect of the year ended 31st December 2021 prior to submitting the VAT return. Okay, so annual accounting scheme. How many monthly payments would be there? Yeah, I got one answer as 10. The others? Ten. Okay. How are we going to calculate the monthly payment amount then? What is the mechanism that we need to use? Last year VAT payable into 10%. Okay. The others, what do you think? Give me 1 second, guys. Sorry. Uh, Guys, I would say it's not 10. Annual accounting scheme requires only 9 months payment. It's not 10. So you will be paying only for 9 months. Are we okay with that? Right. So it should be 9 months. And we are not taking as 10%. What we are going to do is we take the last year's VAT liability and divide that by 9 because we are paying within 9 months. So last year's one is 47,700. So we divide it by 9. Are we good? Yes, that is there. So in certain answers for what you call Kaplan, we have small adjustments that we have to do. Because what happens is these are past papers that they're picking up now. So, and these tax related stuff, we are changing each year. So that's why I told you guys, don't refer the multiple choices given in certain calculations. Stick to your answer in this paper. Because certain past papers are not adjusted. I mean, not exactly only the papers, certain answers. Even in ACCA portal, sometimes that happens. Certain answers, they miss to adjust it for the current tax year. That is there. Even if you go in the ACCA portal, for certain past papers, you do not even have the current tax rate tables. The tax rate table also even a older version. Kaplan is also like that because what happens is these books and all, they have to amend each year, right? So currently we are having a small issue because we are unable to start the certain calculations because of this issue for the new batch. Since no one has officially published any of the, uh, not that they are lazy, the thing is there are humanitarian errors going on. Uh, Tax is such a paper since it's getting renewed each year. So even the lecturer might commit an error when he's teaching. Because sometimes the older stuff are still there in our mind, right? Because for the lecturer, might have been taughting that for 1 year. Kaplan, they might have using that for 1 year, but out of the blue moon, next year, the things are getting changed. So as a result, there can be certain humanitarian errors in these books. So that is the issue with these books and all when it comes to taxes. So this problem is not there in other papers actually. This problem is only there with tax. So it's like this, guys. Yes, when it comes to the materials in taxation, we have these kind of problems. The reason is it is getting changed each year. And coming back to the original question that you raised, when we were doing our O levels, we did around 8 to 10 subjects, right? Everyone minimum 8 to 9. So, do you think the maths teacher is capable of answering your science paper? What do you think? That will not happen, right? Though they have studied everything, what you guys have studied, I don't think the maths fellow can answer to the science one. So, things like that is happening here as well because these things are getting changed each year. It's not that easy to make sure that everything is again in place. So that's why in my case, when I'm preparing the materials, each year I start from the scratch. If there is a change, I start from the scratch for the questions. Otherwise, the possibility of committing an error is really high. Okay. In my case, I was lucky though. My teachers knew what they were teaching at least. Right. So are we clear on this one? Question number 4. Any doubts on what we need to do? So it will be 9 months and then 47,700 divided by 9. That is not here actually. We are good? Right. Eshma, Nafiz, and I'm not sure who has joined as top. Top, are you guys okay with question number 4? Great. So can I know the name of the person who has joined as top, please? Top, what is the actual name? Ah, Ali. Okay, no worries. Right. Coming back to question number 5. Uh, okay. The question is, what is the amount of Lily Limited's deductible pre-trading expenditure in respect of the year ended 31st December 2021? Okay. So we are looking into pre-trading expenses now. Lily Limited commenced trading on 1st January 2021. The company incurred the following expenditure. Okay, great. The following expenditure prior to 1st Jan 2021. So that means before they start the trading, there are certain expenses that they have incurred. 30th November 2013, initial market research 15,000. 6th June 2016, research into competitors 12,000. 31st July 2020, entertaining potential customers and suppliers 8,000. 5th December 2020, donation to local school fair in exchange of advertising 2,000. So now just tell me roughly what are the expenses that you are going to consider from here and what are the expenses you are not going to consider. Okay. Sorry guys, can you see the screen now? Great. Computer research and donation we don't take. Expenses from within 7 years. Right. So I agree, we take expenses within 7 years, but we can only take expenses that assume there is an expense. For an example, in this case, I'll take an example as okay. The market research or the research into competitors. Assume one of these is development cost in nature. For the time being, assume. Or else, let's say you have invested in capital assets, 10,000 in computers. Though it is falling within the period, if we are to use that, let's say you have invested in computers on February 2021. Will we allow that to be deducted? The investment is done on 1st February 2021 on computers. Will we allow that to be deducted? Great. We won't because it's a capital expense. So even though we say the expenses within the last 7 years are allowed, we have to see whether these are deductible expenses if those happen during after commencing the trade. If so, only we can deduct. That is the learning point in this one. So let's go to a small Excel and see how we are going to tackle with this one. $15,001, that is on 2013. So that is not falling within the 7 years band, right? 7 years band would be from 2020, 19, 18, 17, 16. 15, 14. So that will be only from 2014. So 2013 is not falling within the 7-year band. So market research is out. Research to competitors. Can we allow that? Entertainment for potential customers and suppliers. Can we allow that? Great. Entertainment expenses we cannot allow, because even while doing the business, if we do that, still it is not allowed. So how can we allow that? Even before commencing the trade. So that 8,000 is out. Then donation to local school fair in exchange for advertising. Can we allow that to be deducted? Yes, as far as it carries an advertising component, we can allow that. So altogether, this would be the situation, right? 12,000 we are allowing. 8,000 we are not allowing. 2,000 we are allowing. So altogether, we have to take only these two. 12,000 plus 2,000, which is 14,000. We are good? Any questions on question number 5? Great. Then I'm moving on to question number 6. Pamela has been trading for a number of years. Her tax-adjusted trading profit for the year ended 31st May 2021 was 53,150. For the year ended 31st May 2022 was 50,350. What is the amount of Class 4 National Insurance contribution payable by Pamela for the tax year 2021-2022? What do you think? How can we derive at this number? Okay. Using the tax tables and can. Yes, good. So this is almost a free mark that they have given, because simply you need to apply, like Muaz said, you simply have to go through the tax tables, get the numbers from that, and just multiply and add. That's it. Simply use the tax tables. Very simple. So up to 12,570, we don't take anything. First, 37,700 will take under 10.25. The balance 2,880 will be taken under 3.25. So altogether, that is going to be 3,958. Are we good? Great. Eshma, Nafiz, are we okay? Great. Any particular reason why we are going to apportion? Because it's year ended May, is it? That is why you are looking at time apportion, is it, Nafis? Yes, it's okay, right. So I agree with Nashat's and Nafiz's comment. It is falling between two different tax years, true. But for income tax and NIC, for trading income, we had a ground rule for individuals, right? That is, we go by a principle called current year basis. So for the prevailing tax year, we take the closest accounting period end and we consider that is the trading income for the tax year. Can we recall we had something called this current year basis for individuals? So we are talking about 2021, 2022. Therefore, the closest year end is 31st May 2021, isn't it? For accounting wise. So that is why we took 53,150 instead of 5350. We go by the current year. We take the closest accounting period end prior to the tax year. So that is 31st May 2021. So we took that. We have 12 months there. So since it is 12 months, we do not need to go for time portion. So straight away, we can take 31st May 2021 numbers and do the calculation. Are we good? Nafis, Nashat, are we okay? Great. Then moving on to question number 7. Okay. It's a very small true or false answer question. Identify by clicking on the relevant box in the below whether the following statements are true or false. Corporation tax is a direct tax on the turnover of companies. True or false? What do you think? Is it true or false? Okay. Isn't it a direct tax? Then why are we saying it's false? Any reason why you guys believe it's false? Correct. Super. It is on the profit, not on the turnover. So that is why it becomes false. Good. NIC is a direct tax suffered by employees, employers, and self-employed on earnings. What do you think? Okay, Moas believes it's true. The others, what is your view? Okay, yes, I also agree. It is suffered by employees, employers, and self-employed based on their earnings. True. Inheritance tax is a direct tax on transfers of income by individuals. What do you think? True or false? Okay, Muaz believes it is true. The others, what are your thoughts? True. Eshma, Nashat, what do you guys think? Nashat and Esma believes false. Okay, we have different answers now. Two truths and true false. Guys, give me 1 second. Sorry. Uh, I was just explaining without unmuting. Sorry about that. Inheritance tax, I agree it's a direct tax, but is it on the transfer of income? It's not transfer on income, right? It is on the transfer of assets, value of estate. We take the reduction of the value of estate, not on the income. So that's why we consider it as a false one. Last one, value added tax is a direct tax on supply of goods and services by businesses. True or false? Okay, yes, that will be false because value added tax has nothing to do with direct taxation principles. It is an indirect tax. So as soon as you see direct tax relating to value added, that is going to be a false statement. Question number 7, are we okay? Or do we have any concerns about question number 7? All right, great. Third one was false. Because it is not about transfer of income. Inheritance tax is about transfer of value of estate, not about transfer of income. Therefore, statement number 3 is also false. Are we okay? Great. Uh, okay. So, Narsad, the possibility of getting one question like this in the paper is high, but only one though. Right. Can you guys try question number 8, 9, and 10 within 10 minutes again? It shouldn't take 10 minutes, but I'll give you 10 minutes. Can you guys give a try? Great. Take 10 minutes, try it, and share the answers in the chat. Okay, guys, time is up. Can I have your answers, please? Guys, can I have your answers? Are you guys there? Okay. Right, I got the answers from Muaz, Eshma, Nashat, Nafis. How about you guys? Eshma, Nashat, Nafis, are you guys there? Okay, let's start then. No worries. First one, which of the following statements concerning self-assessment tax return for individuals is true? So we are looking at the tax administration part then. Probably eating dinner, okay? Sorry about keeping you guys late, but unfortunately, I also didn't have the dinner. Only after the class I will also be having, so don't worry. Right. So we are moving on to tax administration now, the topic that most of the students hate. Individuals with tax payable of less than 1,000 for a year are not required to file a tax return. Is it true? Do we have something like that? Right. So we don't have anything like that. Okay. First one is out. Individuals are only required to file a tax return for the tax year if they receive a notice to deliver from HMRC. Is that true? Great. That is also fake because uh what do you call, it's your responsibility. It's self-assessment. That is why it names as self-assessment. It's your responsibility. So even if they don't send the notice, you have to inform them and do the self-assessment payment and do the return filing as well. Second one is also out. Third one, all individuals who submit a tax return on time are able to have their tax payable calculated by HMRC. Is that true? Okay, Nasser believes it's correct. The others? Yes, no. Okay. I would say that is yes. If you submit the return on time, if it is an online one, automatically calculation will happen. If it is the uh, physical one, still they will do upload it to the online one and do the calculation for you. So if you file it on time, yes, you get the advantage of getting it calculated by HMRC. Last one. The taxation return for an individual covers income tax class 1, class 2, and class 4 NIC. Is that true? That is also not true. It will cover only class 4. The other classes of NICs will not be there in the individual income tax return. So the correct one would be C. All individuals submit a tax return on time are able to have their tax payable calculated by HMRC. So the correct one is C. Is everyone agreeing on that? Any doubts on question number 8? Great. Moving on to question number 9. Sorry. In certain circumstances, an individual is automatically not resident in UK. Okay, seems like they are going to touch the residency rules. Indicate by clicking on the relevant boxes in the table below, whether the following two individuals satisfy or do not satisfy the test to be treated as automatically not resident in UK. Okay, so what are the automatic UK non-residency tests? First of all, we should know that, no? What are the automatic UK non-residency tests? We had three automatic UK non-residency tests. What are those three? But you have to remember the stuff because can be testable. So it's a past paper, it has been there. So that means even in your exam, it can be tested. Don't underestimate residency because to be honest, if I'm your examiner, I can come up with a 10-mark question in section C even from residency. Should be in UK for more than 180 days. That is automatic UK residency test. So these fellows are talking about other way around, no? Non-residency tests only they are looking at. Good thing. Yes, I also think so. It's a good thing that I'm not the examiner. Okay, Eshma's one is correct. If you have stayed less than 16 days in UK during the tax year, you will automatically be considered as a non-resident for UK tax purpose for that particular tax year. Good. What are the other two? We had three. One is given by Eshma. What are the other two? Okay, less than, not 48, 46. Less than 46 days, not working, less than 46 days, if he or she has not been considered as resident for the past 3 tax years. So, was a non-resident for the past 3 tax years and less than 46 days in the current tax year. Then again, automatically you will become a non-resident. Are we clear with the second principle? Right. The third one, third principle, can anyone recall? The third one is less than 91 days and you are full-time working overseas. No work in UK. You are full-time working overseas and the time is less than 91 days you stay at UK during the tax year. Third point also, are we clear? Right. So now we identified one area that can be tested, but we do not recall properly, residency. So you guys have to revisit the residency related rules and make sure you are good with the residency. Muaz, are we good? Great. So let's talk about these two individuals that they're looking at. Eric, who has never previously been a resident in UK. He was in UK for 40 days. So what do you think? Does he satisfy any kind of a UK automatic non-residency test? Never been a resident in UK and stayed only 40 days in UK during the tax year. Does he qualify any of the automatic UK non-residency tests? I would say yes. The second test he is qualifying, right? Less than 46 days and not a resident for the past 3 years. So he satisfied the second automatic UK non-residency test. Eric, are we good about Eric? Great. Then Fran, who was a resident in UK for the 2 tax years prior to the current year, and she was in UK only for 18 days. What do you think? Okay, Eshma believes not satisfied. The others, what do you guys think? I would also say not satisfied because the rule is satisfied. Okay, Nafis believes satisfied. Which one do you think she's satisfying, Nafis? Which automatic UK non-residency test that you believe she's satisfied? More than 16 days. Okay, so it should be other way around. It should be less than 16 days to consider as an automatic non-resident. So don't get confused on the residency test and the non-residency tests. So first we check whether any of the automatic UK non-residency tests are satisfied. If yes, story is complete. If no, then check whether any automatic UK residency test is satisfied. This less than 16 days is an automatic UK non-residency test. So it should be less than 16 days. In this case, it's more than 16 days. And none of the other criteria are also satisfying. So Fran, we can say does not satisfy. Does everyone agree on that? Great. Nafis, are we okay? Any confusions between these two now? Or are we good? All right. Then I'm moving on to question number 10. Max is employed by Star Limited on 6th April 2020. Star Limited provided Max with a camera for his personal use. Okay. Asset for personal use. Camera had a market value of £2,000 on 6th April 2020. So it has been given for him to use on 6th April 2020 and the market value at that time is given to us. On 6th April 2021, Star Limited gave the camera for Max for free. Okay, so they have gifted the camera to Max on 2021. At that time, camera had a market value of 1,400. So we have to calculate what is the taxable amount. Let's see. So we have to compare two things here. That is the remaining value in asset in use and the market value. Market value at the time of gifting is 1,400. Market value at the time of giving for use is 2,000. Value in use would be, so he has used it for how many years? Only 1 year, right? It has been given to him for use in 2020 and 2021, the gift has happened. So he has used for only 1 year. Agree? Right. So that means 2,000 into 20% might have been taxed in 2020. Do you guys agree on that as well? Great. So that means yes, there is 1,600 which is not taxed. Exactly. So we have to compare these two. The market value at the time of the gift and the unused value of using the asset. We have to compare those two. Out of that, we take the higher. In this case, the higher one is 1,600. So we will be taking 1,600 as the taxable value. Are we good? Any questions? Question number 10, any queries from anyone? Muaz, Nashat, are you guys also okay? So the answer would be 1,600. So the higher of market value at the time of gifting the asset and the unused value or untaxed value of asset in use. So in this case, untaxed value of asset in use is higher than the market value. So we go for that, 1,600. We subtract the tax amount, not the tax amount, but the amount that we would have used in the income tax calculation in the last year, we take that. That is 2,000 into 20%. Muaz, are we clear? Nasrat, how about you? Are you okay, or shall I explain once more? Sorry. Okay, sure. So let me go through this one once more. So the scenario is there was a camera in 2020 that has been given to use. So that means then an official asset given to private use. In 2020, we would have taken the market value into 20% as taxable for the employee. Then on 2021, they have gifted the asset. The asset that has been given for private use in the previous year, the same one now we are giving for gift. If that is the case, we have to consider two factors. Number one, the market value as of the time of giving the gift. That is 1,400 in this case, this one. And then we have to consider what is the untaxed amount compared with the value that you have used. So at the time of giving the asset for private use, the market value of was 2,000. He has used this for only 1 year, so he would have considered this only for one tax year. So 2,000 into 20%, which is 400. The gap between those two would be the untaxed amount. Compare that against the market value at the time of gifting the asset. Take the higher amount as the taxable benefit. Nashat, are we good, or still do we have any unclear areas here? All right, great. Then I'm moving on. Okay, can you try question number 11, 12, and 13 within 10 minutes once more? Will you guys be able to give a try? Great. Take 10 minutes, attempt the questions, and share the answers in the chat. Then we'll start discussing. Your time starts now. Okay, guys, time is up. I got the answers only from Nafis. The others, how about you? What is your status? Ishma, Muaz, Nasat, what are your answers? Isma, Muaz, Nasat, are you guys there? Okay, what about your answers? I received answers only from Nafis. The others, what are your situ? Okay, like Muaz said. Okay, right? Where is Muaz? Okay, I think he's also doing the same thing. Right, let's go through. We have Kora, who has made a cash gift of 300,000 to her niece on 30th April 2016. Okay, we seems like looking at inheritance again. She then made a cash gift of 500,000 to her nephew on 31st May 2017. Both of these amounts are stated after deducting available exemptions. Okay, so that means all the annual exemptions and all are already deducted from these amounts. She has subsequently passed away on 31st October 2021. What amount of inheritance tax was payable as a result of her death in respect of the cash gift for 500,000 for her nephew? So remember, guys, these amounts, these 300,000 and 500,000, are after deducting 3,000 or 6,000 or whatever AE. Whatever the respective AEs has already been deducted. So the only thing that we have to worry about is the nil rate ban. For the first gift, can she claim any nil rate ban? I would say yes, because question only gives us details about these two gifts. So we can assume there are no other gifts. So since she has passed away, we can claim nil rate ban for the first gift. For the second one, there would be a remaining amount. On the balance, you can claim the nil rate ban. Let's see how we do this calculation. First one is 500,000. We have a nil rate band of, oh, sorry, the one that we are talking about is 500,000, the second gift. Overall nil rate band is 325,000, but out of that, 300,000 is already utilized for the first gift. So the remaining nil rate band would be only 25,000. 475,000 would be the balance amount. But for that, we can go for the tapper relief as well. So how do we calculate the tapper relief? Can you recall the tapper relief? So tapper relief is coming. Yes, tapper relief comes into the picture based on the number of years that you have. I mean, the gap, the number of years, the gap between the date of death and the date of gift. Based on that, we go for the tapper relief. There's a small table that will be given to you in your exam. So based on the table, like Nafis said, it would be 40%. So 40% of this will be taken out. The balance will be taxed at the tax rate of 40%. So the answer would be £114,000. Are we okay? Any questions on this one? Question number 11, any questions or are we good? Uh, Nafis is okay. Eshma, Nasat, Muaz, are you guys okay? Right. Then I'm moving on to question number 12. Okay, I got a request to explain once more. I'm going through it once again. So since they're asking for gift of 500,000 pounds, I'm starting straight away from that. I took the 500,000, then I checked the available nil rate band. So when I calculate the available nil rate band, there is an already 300,000 gift that is given. So nil rate band is 325,000. So only 25,000 is remaining from the nil rate band. That will make my gift of 500,000 that will be reduced to 475,000. Are we okay up to that point, Nasat? Right. So then you can use two methods. One, calculate the taper relief based on the amount or apply 40% on this 475,000. Then figure out the taper relief. You can use either way. So taper relief is an additional relief given to the taxpayers based on the time gap between the date of death and the date of gift. So there will be a table that will be given to you in the exam. Based on the table, this falls between 4 to 5 years, right? Because we are talking about 2017 to 2021. So it's between 4 to 5 years, then the taper relief would be 40%. So once we take out 40%, the balance taxable amount would be only 114,000. Nasat, are we okay or still you have any uncleared areas? Okay, great. Then I'm moving on to question number 12. We have Rajesh, who's a sole trader. He correctly calculated his self-assessment payments on the payments on account for the tax year 2021-2022 and paid these on due dates. Rajesh paid the correct balancing payment of 1,200 for the tax year on 30th June 2023. Indicate by clicking on the relevant boxes in the table below what penalties and interest Rajesh may be charged as a result of his late balancing payment for the tax year. So how do we go ahead with this one? So for delays in what you called sorry, there was a small issue, guys. Is the screen visible now? Right. So is there penalties for delays in payment in account? This is again tax admin. Will there be any penalties for delays in payment in account? Moaz believes yes, the others. Will there be any penalties on payment on account? Mascot believes yes again. Nafis, what do you think? For delays in payment in account, will there be penalties? Can you guys recheck the handout now itself and check whether there are penalties for payment on account or not? Just recheck the handout. Because this one usually they always test. This payment on account and penalty calculations. Okay, no worries, Nafis. Can all three of you go back and check the handout and see whether we have any penalties for payment in account, or if yes, how much is the penalty for the delay? Everyone, can you just check the handout or the tute or book or whatever you guys refer? Can you quickly check whether do we charge any penalties for delay payments on payment on account system? If we charge, how much? Guys, okay, let's go back to the handout then. Let me open the handout from here. The one that I usually use. 3.25 in daily basis. Is it the penalty or the interest? 3.251. $3.25 is the interest, isn't it? Agree? Right. For penalties, how much are we charging? We have percentages, but for penalties, there are no penalties for payment in account. It's zero. Penalties we do not charge for payment on account. That is only for normal tax payments. For payment on account, only one that we have would be the late payment interest. Are we good? Muaz, Nashat, Eshma, are you okay? Right. So penalty would be zero. The interest, how are we going to calculate now? So it will be 3.25%, and you have to apportion, time apportion, because this 3.25 is an annual rate. So we have to time apportion the amount. So by how much that they have delayed? How many days they have delayed it? How much is the delay? Guys, what would have been the deadline for the balance payment? Can anyone recall how much is the delay here? Yes, so that would have been the deadline. But they have paid on when? 30th June. So how many months delay is there? A delay of how many months are there? 5 months. Great. So then what we need to do? 3.25 on the balance payment, time apportioned for 5 months. Are we good? So it will be around this $13, 13 pounds. Eshma, Nashat, are you guys also fine with question number 12? Nashat, how about you? Okay, let's move on to question number 3. 3 in the sense 13. For 2 years, we have the trading profit or loss, property income, qualifying charitable donations, QCDs. If Oblong Limited makes a claim to relieve its trading loss of 102,800 for the year ended 31st March 2022 against the total profits from the year ended 31st March 2021, how much of the loss will remain unrelieved? So how are we going to calculate that? Simply, I took the total income, that is 102,800. Then I set off the property income. We have a property income of 10,100 in the current year. First of all, we can get the relief against that. So I took that out. Then the previous year, I have a trading income of 79,400. I'm using that. I have a property income of 6,800 also. Once I claim everything, the unrelieved loss would be 6,500. But if I do this, QCD of 1,600 for the previous year, I will lose. Are we good? Eshma, Nasat, how about you guys? Are you okay? Right. 14 and 15. Would you guys give a try? Or shall we just discuss and finish it off? Okay, you guys give a try. It's 2 questions. 2 marks. So we can spend around 5 minutes. Can you try within 5 minutes this one? Let's try to finish this off within 5 minutes. Then we'll discuss. Give a try, guys. I want you all to try. Give a try. Take 5 minutes and give it a try. Then we'll discuss. Okay, guys, time is up. Can I have your answers, please? Deferring CGT due date. Okay. All right. Let's go through the question. Putting an asset into joint names with a spouse or a partner in a registered civil partnership prior to the asset's disposal can can be sensible capital gains tax planning. Which of the following cannot be achieved as a result of a direct result of using this type of a tax planning? Okay. Making the best use of annual exempt amount. We can do that, right? Because if we transfer prior to the disposal, interspouse or interspouse or interpartner transfers are exempted from CGT. So both parties will have the annual exempt amount for the same transaction now. Deferring CGT due date will not be a result of this because both parties will have the same due date now. Reducing the amount of CGT, yes, that will happen because the annual exempt amount, and if there is any available unused excess basic rate band. Making the best use of capital losses, yes, that also can be done. So the answer would be B. Just because you transfer between the spouses, there won't be a change to the due date. Is everyone okay? Nasrat, are we good with that? Awesome. Question number 15. AVA's income tax liability and Class 4 national insurance contributions for the tax year 2021-2022 are 4,840. Her income tax liability and Class 4 NIC for the tax year 2020-2021 for the previous tax year were 6,360. What is the lowest amount to which Eva could make a claim to reduce each of her payment on account for the tax year 2021-2022 without being charged interest? So I got answer from Nafis. The others, what are your thoughts? Nasrat and Ishma? What do you think? Give me 1 second, guys. So this is simply about how are you going to calculate the payment on account. So we have the current year liability. The previous year liability, the immediate previous year. No worries, Nafis. So what we need to do is payment on account is based on the liability on the immediate previous tax year. So the immediate previous tax year was 4,840. Take that, divide by 2 would be the minimum that you have to pay. So 4,840 divide by 2. 2,420 would be the correct answer. Are we okay with that? Nashat, Nafiz, are we good? No, since we have the numbers, we can go for 4,001 because we have the numbers here. We have done the calculation. 2021, 2022, you can use because we have done the numbers, right? We have the numbers. So if we have the numbers, we can go for the latest available one. Are we okay? Right. So let's stop at this point, guys. I can see most of y'all are dropping gradually. Yeah, I can understand it's already 9 o'clock. So yeah, I understand your point of view. So let's stop at this point for the day. We'll catch up on the next week. But can you guys do a small favor for me? Can you go through the rest of the questions and be prepared before the next class? Then we can reduce the time that we allocate during the class for you to attempt the question. If you guys keep the answers ready with you, then I can straight away go ahead with the explanations. Great. So then keep the answers ready with you all. So I don't need to give a separate time for the answers. When I ask, you can share the answers with me. Let's keep that plan for the next week then. So keep on revising and reach out to me if there are any queries from your end. I'll share the answers, Ishma, after the next class. Otherwise, it will be unfair, no? Because Excel will have the answers for all the other questions as well. Is it okay if I share after once we complete the paper? Okay, great. So I think for the time being, you guys can view the stuff. Right. So let's wind up at this point. We'll catch up on the next week. Thanks a lot, guys. And study, practice, and reach out to me if there are any queries. Good night then. Take care. We'll catch up on the next week.